Let's get some insights in the news shaping the markets. For that, we welcome in Michael Reinking with us, senior market strategist here at the New York Stock Exchange. Thanks for being here.
Morning,
Exciting to get down 40,000. I know it's just a psychological level, but it was here for 10,000 and each milestone, and whether it's, I remember going from 20 to 21 to 20, it's sort of cool, and we're holding it. That's a good sign too, right?
Yes, yeah. I mean, we've seen a pretty significant rally, right? So over the last 4 weeks, right, we've seen the S&P 500 kind of reverse that April sell-off that we had seen, right? And there were a couple of factors, that really had driven that, the move higher in yields, the move higher in oil prices, and then kind of this volatility pickup that we had seen, and that caused some systematic de-risking. But since then, a lot of those factors have started to reverse, right? And now you're trading at new all-time highs again, right? And the environment seems pretty positive.
And so at this point now, I was actually hearing this morning how Europe is more likely to cut before the U.S. cuts. Where do we stand on the global picture and the U.S. cuts?
Yeah, so I mean, we are seeing this divergence, from the U.S. economy relative to other economies around the globe. Right, there is this expectation that we will see rate cuts coming out of the BOE and the ECB, before we do see anything coming from the U.S. This week we will get inflation data out of Europe or London, so that will help to shape some of that discussion. At this point, we just got our first piece of inflation data in following 3 months where the inflation data in the U.S. came in hot. Right, which showed some moderation. It was just about in line with expectations, and we are starting to see some signs that the economy is starting to moderate and economic growth is starting to moderate. Right, so that is kind of pulled back the fears that had seeped into the market in April that we were going to get potentially rate hikes. Right, and now we're back to this question of when does the potential kind of easing of monetary policies begin.
Do you feel that, labor market obviously is something people have been watching, maybe a little bit of weakening there. Are there more headwinds? Are you worried about sort of this turn back down south, because you noted the reverse that we saw from the April weakness and how we've moved to new highs. Are we worried that there's going to be volatility or maybe turning back? Right.
Well, so I think, we're at this potential inflection point, right? And markets right now are reading that moderation in economic data as that is the beginning of the descent into this kind of long-awaited soft landing, right? That we've all been kind of looking for. I think, as you just pointed out, the labor market is really going to be the linchpin to that, right? And if we do start to see some more significant weakening in the labor market, right, that'll have the potential to impact kind of consumer spending and consumer behavior, et cetera. So I still think we're in a pretty good spot, right? I mean, 175,000 jobs added to the economy last month, right, is a slowdown from 300, but it's still a pretty healthy number. We did see the claims data have ticked up for 2 weeks, right? So that's going to be a focus. And then later this week we get the global flash PMIs. And we've seen, and that's been one of the issues, that we've seen the kind of survey data over the last year has looked much more negative than the hard data has, and it hasn't necessarily flown in. We've really started to see that consumer confidence, the surveys really start to deteriorate more significantly. Right, so we just need to see, is this inflection point the start of the soft landing, or does it actually turn into something more?
So at this point now, what should they do or not do? How do they play this? I did want to get your thoughts on commodities, but I'm running out of time, and I just want to make sure that, as a strategist, as you're putting a portfolio together, what's some advice here? Yeah,
I mean, I think, and it's like we'd said back in April, right? And at that time I'd said, look, I think this is a buyable pullback, right? And continue to kind of work, kind of with your investment advisor, continue along your plans. And I think, right, that paid off. We didn't necessarily see the pullback that I would have liked to have seen. Right, but and I think you continue to work along those lines. As you pointed out with commodities, right? Last time we were on, we talked about starting to move into some materials. I think that's still a sector that offers some opportunity. And I think you could start to maybe look for some catch-up trade from the healthcare sector, which has been an underperformer for kind of the last 2 years.
Oh, so materials, healthcare, buy the S&P on pullbacks, right? Pretty much, right?
Yeah.
Something like that. And then when it comes to commodities. I mean, you have gold at new highs, you have oil back above 80. I mean, we're watching everything. Nat gas, cocoa's at the new lows. I mean, there's been a lot of inside baseball on commodities in the past week or so, I feel like.
Yeah, there's been a lot of volatility. We've seen a lot of strength, especially within the metals complex. Right, Friday we had a really significant rally after there were some more steps taken by the Chinese government to try to firm up their property markets. And this morning that extended to the upside. We've actually seen a little bit of a suggestion that we may have be running out of steam here, right? If you look at where gold, copper, and silver kind of traded overnight, they're pretty significantly off of the highs. So we have to kind of see how we close today, right? Gold's 1% off the highs. Copper's actually turned lower now, right? So this suggests that we may just be in for a period of some consolidation.
Right, understood. And then earnings season, how do you feel that went, and what's the future looking like?
Yeah, I mean, look, I think it's been a pretty solid earnings season, right? It's kind of hard to argue with that. We've got some big names, coming up, right? But it does seem like the kind of demand for infrastructure and for kind of AI related products is still kind of very much a key. We continue to see companies instituting large buybacks, right? And that's going to help to kind of keep a bid beneath the market. And I think as we look forward, the real key is going to be that economy, as that we just talked about, is that what will ultimately begin to create some volatility in the market and some concern is if we do start to see the economic growth start to moderate to a point where people get concerned that it will impact corporate earnings, that's when you're going to start to see the volatility begin to pick up. If you think about where companies' focus has been over the last couple of years, they've really focused on operational efficiency, cutting some costs out of their kind of business models. So that suggests if we do start to see that there's not a whole lot of fat that needs to be cut, and that kind of leads you into this soft landing narrative. Yeah,
and we'll have NVIDIA, to your point, when you talk about AI and all that. NVIDIA's on Wednesday. We have Palo Alto, Zoom, AutoZone, Lowe's, Macy's, XPeng, Toll Brothers, Urban Outfitters, just to name a few. So we will have a lot to talk about. Michael Reinking, thank you so much for being with us here of the New York Stock Exchange. Thank you, Michael.